Welcome to the Standard and Rich podcast, where finance meets fun. Join your hosts Danny Gallo and Jonathan Elkoubi as they navigate the complex world of finance with a touch of humor.
Welcome back, everybody, to the Standard and Rich podcast. This is our 5th episode. We are joined with our host, Danny Gallo, and me, myself, Jonathan Elkoubi. Danny, how was your week in the stock market this week?
I had a pretty good week. It was very eventful with some nice market data and earnings. How about you, Jonathan?
This week, not much for me, but I didn't really keep up with all the Reddit stuff. But we'll cover it after GameStop, what happened. We'll cover that later. Let's move on to the market news segment. Talk about what news happened this week.
So we did have news on the Biden administration imposing tariffs on every China-made EV so they could protect all their legacy autos and the companies here. What news did you hear about this week?
I did look at the jobless claims report. So they actually reported 231,000 jobless claims, and the estimate was 212,000. And just to give you a reference, the previous quarter was 208,000. So we see that number increasing. And as we know, Danny, what does bad news result in the stock market?
Bad news is great news for the stock market.
Yes, the
Bad news
rallied off the bad news.
Exactly, because the market went from basing one rate cut to after that data coming out to raising it to 2 rate cuts for this year. So, but we still have to remember at the beginning of the year, it was 6 rate cuts that were priced in. I thought it was way too much, but still seeing that second rate cut getting priced in is pretty good news. It could spark another rally. Imagine being at these highs with this high of interest rates and now getting them cut down might help mid to low market cap companies and also tech companies. What else happened this week? A lot of earnings came out.
Yeah, I was looking at Uber. Uber had some terrible earnings performance. Their EPS, they missed. Their expected was 0.22. Their EPS was negative 0.32. The revenue, I think they hit. Their expected was 10.11 billion, and their actual was 10.13, and they were down 7% on this news. Any other companies you were looking at?
Well, I have full disclosure. I have shares in Kratos, which is I think 6% of my portfolio. I was looking. It's also one of the stocks I did use for my stock pick of the week. Their EPS was reported at 0.1 versus 0.05 expected. Their revenue were 277 million in revenue compared to 250 expected. Also, that was a jump of 20% year over year. They have record backlogs. Everything's going great on their side, so I'm very bullish on the stock. Were you looking at any other earnings?
I mean, I also saw Shopify. Shopify also had some bad news. They beat revenue. Estimate is 1.84 billion. They hit actual of 1.86, so just barely beat revenue. But their EPS, they also actually no, they beat it. So they beat their EPS. Their estimate was 0.17, and they got 0.2. So they're down 17% on this news. I think it was because of their expectations or their guidance. Was that right?
Yeah, so anything that stocks, if they don't come close or they miss expectations in terms of revenue or earnings for future quarters, the market has no sympathy for it. So Shopify just got destroyed. I think they were down 17% by this news. It was kind of crazy because they literally hit on every metric for this quarter. There was also Apple that we spoke about last week that we said that they need to start innovating. Uh, they were reportedly in talks with Rivian about a possible partnership. This comes after them saying that they were going to end their car, all their investments in their car, the project. They also came out with their new product, so they had their thinnest iPad ever. They came out with a new pencil, as I called out. Came out with a new pencil, which costs 129 USD. So go figure. And so I guess they're trying to really push the boundary there to try to innovate a little bit more. I know I saw a few other things that they tried to do um, to bring AI faster to their phone. I'm pretty sure I saw something about Siri as well. So we spoke about that in last week's episode as well. We also had Hood that reported this week. I found that pretty interesting. They had one of their best, a great quarter. Let me just get the data in front of me right here. So I'll just cut that part. Yeah, so their EPS was 0.18 versus 0.12 expected. The revenue was 618 million versus 555 million expected. Their net income was 157 million versus 55.7 million expected. Adjusted EBITDA was 247 million versus 174.1 million expected. They were up 5% on that news, so they literally had a very good quarter. I know that the stock, it was up 5% after hours. I know that the stock went down after that a little bit because they said it might just be this one-time thing, so they're not sure if they could replicate the same thing next quarter. So we'll see what happens. But honestly, talking about Robinhood right now would be a great way to move into talking about what happened with GameStop this week.
Yeah, so on Twitter, somebody came back from 3 years of no tweeting. Roaring Kitty, the guy who actually started this whole thing, is back. What do you think about that?
I was looking at that last night, so Sunday night, sorry about that, on my phone, and I was like, it was going crazy on X. Like right now, it has 22 million impressions. So I don't like things that are too volatile, that move way too up and down. Like you could lose a lot of money quick. You could make a lot of money fast as well. Uh, but just seeing that pre-market jump at 35% just after one tweet, it was pretty insane. And then seeing it get halted 9 times in the first hour was insane. So it went from 35% to 50%. So 35% got opened, 50% got halted, opened again, went 60% got halted, then 70% got halted, 80% got halted, 90% got halted, 100% got halted, 110% got halted. It was just insane. And this all in probably an hour and a half. So the apes and the diamond handers and this whole community were back for some action. I think I read somewhere that some hedge funds and shorters were already down $1 billion just on that.
And how much are they up today in total? At the end of the day, I think they're up 70,
74%. 74%, if I'm not 74%. And after hours, they're up 21%. So everybody's focused really on GameStop, but there's also other plays that go along with it. So you have AMC. So AMC, what's weird is AMC didn't get halted today. So AMC's up 78%, but AMC did not get halted today. So I found that a bit weird, and it's up 24% after hours. And the other play that's a bit discreet, but not a lot of people are thinking about it, is BlackBerry. So BlackBerry was up 7% today, and after hours are up 14%. So they didn't have a huge effect last time this saga came, but they were still part of that crew of a few stocks that were just
Meme stock.
jumping higher. Meme stocks, exactly. So for some people that don't know what happened, we could give a bit of a recap about what happened back then.
So I'll do the recap. So basically, what happened is there's this guy, Roaring Kitty, and he's on the Reddit channel called Wall Street Bets. He kind of pitches the stock, GameStop. He says it's undervalued, and he kind of buys in at $5.16. That's what it says. Is buying it right here. I don't remember how much money he put, but I think he made many millions. He noticed, basically his thesis was that 140% of the shares were shorted, which is impossible. So the only way you could short 140% of the shares is if you short the shorted shares. So shorted shares were being shorted, which sounds absolutely insane and impossible. So he found this obviously ridiculous. He decided to buy. He put a significant amount of his net worth in here. He was very confident about it. He got everyone on Wall Street Bets to pump the stock, basically. And it went from $4 to over 400. I think it hit at one point, but now the stock is split, so the price is not the same as it used to be. The companies that got affected by this, Citadel, Melvin Capital, they were working with Robinhood very closely to halt the trading, to stop the stock from going higher. It didn't work really well. I mean, I think it delayed it, but it didn't do a good job of stopping it. I think Melvin Capital ended up going bankrupt. Is that true? They went bankrupt?
Yeah, Melvin Capital did go bankrupt. Citadel decided to pull some of its money, and then it couldn't help. What happened on that day too, which hurt Robinhood's credibility a little bit, was that the GameStop AMCs, you couldn't buy shares anymore on Robinhood. The only button you could click is sell shares. So that sparked a lot of outrage against Robinhood. But when you really dig down, you find out that Citadel is Robinhood's market maker partner. So what that is, it's a practice that allows the two firms to split profits made on trades from retail customers. So that really allows Robinhood to give free trading. So a lot of people reacted horribly to that, which is, I understand them. That made a lot of people lose a lot of money when they did that.
And I think that's unfair.
Yeah, it is unfair. You're going against the big guys. Always come out with different theses saying they have a buy rating, a sell rating, which does influence the stock. But when a retail investor has backing of other retail investors and says this is a buy, it's illegal or it's not good for them. So it's like the small David against Goliath. It was that type of battle. It was pretty intense. Well, you had Melvin Capital just go down, which was over $1 billion company. The price did go up from back then. Did go up from $17 to $483. And if I'm not mistaken, he had $50,000 inside. If I'm not mistaken, I think it was $50,000, and he ended up with 45 million, 50 million. So that was pretty insane.
And what price did he cash out again? At 100, I think?
No, he didn't cash out. Apparently, he's still holding it.
He's still holding?
Still holding it. Yeah.
Is there any way to confirm that? I don't think that's true. There's no way that's true.
How is it no way that's true? He's a diamond hander, buddy.
Why would he hold it? He had so many millions of dollars.
Well, it doesn't mean he doesn't need to sell all his stake. I'm pretty sure he still has a stake in GameStop. I can't confirm it 1,000,000%, but I'm pretty sure he still has a stake in GameStop.
I hope he sold for his good. I mean, the stock peaked a while ago. It's a lot lower from the highs, no?
Yeah, but like you said, he got into the seven, so even when it was at 12, he still made double. Well, he made 100,000. But
Well,
I'm pretty sure he did sell a lot.
the stock right now is not the same as before because of the stock splits. They split it a lot.
But he did, I'm sure he did cash out some money, but he did keep some as well.
Okay.
But look, he's doing a big return. Look, with that big gain today, man, it's crazy how one tweet from one guy, just a normal guy like you and I, with a few more millions, obviously, is capable of influencing 2 or 3 stocks just like that. I think nobody's else attention today, like, I don't even own the stock, and I didn't even look at my stocks today. And I was looking at GME and ANC and BlackBerry all day long. It was pretty crazy.
That is pretty crazy. I think this is a good place to switch over to the stock battle.
Hey guys, don't forget to click the links below to sign up on Wealthsimple and Questrade to start investing. Fuck, start again. Oh wait, no, you're gonna clip it?
Sure.
So, hey guys, don't forget to click the links below to sign up on Wealthsimple and Questrade to start investing. You will get a free $25 and $50 sign-up bonus with any deposit amount over $1. And also, don't forget to like and subscribe our podcast. We should do that. So yes, so stock battle recap. I would like a round of applause for winning this week. Please, please.
Boo. Boo.
So, Berkshire Hathaway was up 1.56%. Progressive was down 1.44%. If we go back to all our other trades that we did, so we're going to close down I think we said we're going to just do it for 1 month. So we're going to close down this trade, which ends up being Jonathan, the winner, by a big margin. So Altria is up 9.72%, and Exxon is down 2.04%. So congratulations, Jonathan.
Oh yeah.
Boo.
1-0 for me.
But the other two, now you had Trex that you picked 2 weeks ago. Now that's down 2.94%. I had Kratos. I have Kratos. That's up 6.38%. So I got you on that one.
Okay.
And the DraftKings and GRBK battle has been going up and down and up and down. Now you were leading, I'm pretty sure, the past few weeks. Now GRBK is up 3.81% and DraftKings is up 4.3%. So I'm taking that one. So 3 out of 4 right now. Even if the Berkshire Hathaway is short term right now with that 1 week, I'm winning 3 out of 4. I'm pretty confident in
3-1.
3-1 so far. But short term, you've been winning. The long term, you've won 1. I'm up 3. So we shall see where it ends up next week. We'll be closing next week, if I'm not mistaken, the DraftKings and GRBK one. So that one's been very close. So we'll see who wins that one.
Well, since you won this week, I'll give you the pleasure of pitching your stock first. What did you pick this week?
So the stock I picked this week is a stock based in Laval. So this stock has been a great compounder, revenue compounder, and acquisitioner. So the stock acquirer, sorry. So the stock is called Savaria. Sorry. So Savaria is a company that is a global leader in accessibility. So they do wheelchair lifts. They do home elevators. They do commercial accessibility products. They do installation and service. They really have a global presence in Europe, in the US, and Canada. They have, like I said, a pretty good product range, and they're a leader in that type of product. So I really like Savaria just because it's a nice compounder of revenue. They have a 2025 objective of hitting $1 billion in revenue, and they're well lined up for that. They came out last week with earnings as well. Their gross margins went up. They missed on EPS because of so they're a leader in that type of project. I think it could go. I've been writing it for the last few years. It's been in the 20s, 21, so I'm hoping it'll hit back around that price. So, like we said, it's more of a short-term thing. So I like things that are a little bit more volatile, let's say.
For these challenges.
And you, Jonathan,
So
for these challenges.
I'm gonna need a drum roll for this. So the stock I picked this week is ticker HSY, Hershey's Company. Everybody knows this company. Everyone's familiar with it. We all know it. We all love it. So why did I choose Hershey's? Very consistent growth, consistent revenue growth, 10-year CAGR of 4.6, 10-year EPS CAGR of 9.6. It's not crazy numbers, but you know it's going to happen every year. Very consistent. We have a strong balance sheet, strong income statement, strong cash flow statement, just strong all around. I want to talk about the qualitative aspects about the business and their brand. And I think it's a very valuable brand. When you go to a DEP or Pharmaprix or whatever pharmacy, you go to buy chocolate. I mean, you don't buy the random no-name brand. You buy the one you trust because you don't want to take the risk on buying chocolate you don't like and having a disgusting taste in your mouth. It's just not worth the extra 50 cents that you're saving. So they have a pricing moat. They can charge more than their competitors. And they've been around for, say, a couple 100 years or whatever, 100 years. So, I mean, clearly they're durable. They've been around for a long time. And I don't think they're going anywhere. So the growth is here to stay. It's consistent. I mean, I really can't go wrong with this. I think it's going to beat you this week. Just because how volatile the week is, I just think we need a steady grower just to beat you this week. And that's it.
Hershey and type for chocolate, I think they win with their Reese's and just their Hershey's brand. In terms of candies, man, I think Mars takes this one with Starburst, Skittles. They have Hubba Bubba. They have Lifesavers. They're pretty solid there. Hershey might have Jolly Rancher, but I don't know, with them going with the chewy Jolly Ranchers, they're a bit weird.
I don't know. I'm not a big fan of candy, but I am a big fan of a 20 PE ratio, which Hershey has. It's pretty low for their historical. They're down like 20% in a couple months, in the past few months. So I think they're going to pick it back up, and they're going to beat you this week.
Savaria being a 20% compounder at 30 PE ratio, that's pretty cheap for me.
39, don't lie to the fans.
39, 40, 30, what's the difference? Because I'm taking this one, buddy.
Well, we'll see next week. Catch you guys in the next episode. Take care.
Before we go, a quick reminder. While we love discussing financial topics, we are not financial advisors. The information provided in this podcast is for educational and entertainment purposes only. Please consult with a qualified professional before making any financial decisions. Thanks for listening, and see you next time.